Hey everybody, welcome to the show. A little breaking news, crypto report of the day. I'm your host, Winkle Nakamoto. Looks like the market's going crazy today. Um, it's unbelievable what a difference a day makes, as they say. Up 15 points in one day. That's pretty impressive, considering the fact that yesterday it was probably down at least that much in many cases. But pretty interesting market this week. Not sure exactly what's going to happen with Bitcoin, but the market cap sure could use some help, and the available supply every day gets smaller and smaller. The amount of Bitcoins in circulation gets larger and larger, and the amount of coins that are available to be mined gets smaller and smaller. Rather, in my opinion, which is not financial advice, and I am not a financial advisor, is that scarcity will make it a bit more valuable. At least that's my opinion, the opinion of many other people, and lots of other information that I've garnered over the past 6 years. So, good stuff. Good stuff coming up on the horizon. Pretty much thinking down the line that in the next couple of months, you're going to see a lot more of these crypto advertisement bans from a variety of different online platforms that, in my opinion, will just disappear over time. They're banned, and they'll, in a couple of years, I wouldn't be surprised if Google, YouTube, Twitter, and the rest of the crew, Facebook, all decide that they're going to unban it and invite all crypto ads to start all over again. But I think at that point it will be too late for them. It already is too late, obviously, to most people that are paying close attention to this market, to this phenomenon, to this paradigm shift. All these things are happening at a very rapid pace, and I just like to talk about it, which is why I do this particular news segments during the day. When I feel like talking about Bitcoin, uh, I'll just log on. Hopefully, you'll like, share, and subscribe below, and maybe you'll learn something from me. Maybe you won't, but either way, I hope we both have fun just commenting and listening and talking and discussing and reviewing information and headline news and breaking news about Bitcoin and cryptocurrencies in general out on the market. So that's my little segment. I may be back later today. I hope so. I should be airing again at 3 p.m., 6 p.m., and 9, or at some point in between. Try to catch us at ohiobitcoin.com/stream. And you'll know when we're broadcasting live. That's the page. You can also obviously catch us on YouTube, on our Facebook page, on our Twitter page, and our Pinterest, and a few other social networking sites that we're on, that we have accounts on. So looking forward to seeing everybody coming back, and we'll be back soon. I'm your host, Winkle Nakamoto, and I am out. Okay, everybody, we're back, and looks like this is your host, Winklevoss Nakamoto, coming at you again live. Just reviewing some of the news of the day and this afternoon lunchtime nooner segment that we have going on. In today's segment, this brief segment, we're going to talk about what's happening with the good friends of ours at the Internal Revenue Service. An article written by Adam James just broke about an hour ago that discusses the possibility that they aren't making it real easy for certain cryptocurrency investors in regards to how they're billing them, I guess, for taxes. So let's get right into it and let's talk about it. I'll begin reading it. The Internal Revenue Service continues to reach its greedy claws into the pockets of cryptocurrency investors, surprising some with unexpected bills. Land of the free home of the IRS, cryptocurrency is still a new and wild market, but that doesn't mean the IRS isn't prepared to screw you over on your digital currency transactions as much as possible. According to the Internal Revenue Service, cryptocurrency investors aren't merely liable to pay taxes when cashing out cryptocurrency for fiat, which would be the case with any property, in my opinion. But that's just my opinion, ladies and gentlemen. This is not financial advice. I am not a financial advisor, but I digress, and I will go back to the article. Rather, anything purchased using a digital currency is taxable as a capital gain, including the purchase of other cryptocurrencies. What many taxpayers still fail to realize is that using Bitcoin to purchase other cryptocurrencies, which is how it is primarily done on many popular exchanges, count as taxable transactions. William Perez, a tax accountant, an online tax filing and advisory service advisor, told The Guardian recently. That often catches people off guard, but once you break it out, you've sold one coin and invested in another. That's one bear trap. Physical purchases made with cryptocurrency are also taxable events, but not just with your standard sales tax. Unlike gift cards or PayPal, which are conduits of exchange, Bitcoin and other cryptocurrencies count as property in and of themselves, notes Perez. That doesn't sound right, but I will continue reading. Under accounting rules, you have property that you exchange for something else. People think because they paid a sales tax, that's the end of the story, but it's not. We're talking about a property denominated in dollars. If you exchange that, then there's a tax liability. Confusing matters even further is the fact that brokers of digital currencies are not required by law to issue 1099 tax disclosure forms which report various manner of alternate or miscellaneous income. Even without these forms, however, individuals must still legally report their cryptocurrency profits. And ladies and gentlemen, that's a fact. Make sure you report all of your cryptocurrency profits. Failure to do so, as this article continues, may constitute tax evasion, and you do not want that, people. Popular San Francisco-based cryptocurrency exchange Coinbase did dole out 1099 forms to some of its users, but that doesn't mean individuals are happy about it or know what to do with it, noted William Perez to The Guardian. Well, they better wake up, in my opinion, and learn what to do about it. Fill out your 1099 if you make extra income. That's simple as that. Among crypto investors, I see resistance to, and by the way, that's not financial advice. I am not a financial advisor. Among crypto investors, I see resistance to reporting it. Then there's another group who've got a 1099 for Coinbase, but they don't know what it means. Okay. Because the IRS rarely, if ever, works for the benefit of U.S. citizens, other cryptocurrency reporting rules only make things even worse. As noted by The Guardian, investors who sell cryptocurrency after holding it for more than 1 year are subject to long-term capital gains, and losses are not deductible against future tax years. Still confused? Don't worry. That's exactly how the IRS likes it. What do you think about the IRS tax rules in regards to cryptocurrencies, Bitcoin, Ethereum, Litecoin, etc.? Let us know in the comments below. If you enjoy these kinds of articles and you'd like to see more of them and more of this kind of content, please like, share, and subscribe below. I am Winklevoss Nakamoto. I'm out.